So Theo, another month has passed and it's been another very volatile time on the stock exchange, with the rand as well also being incredibly volatile. And one of the questions we're getting from our clients at the moment is, we've had this long period of time, now it's into the years, where the JSE has just not given us a lot of return. And they're getting a sense of impatience and despondency about the future growth. And I guess as a business, we can't make predictions about what's going to happen next week or next year. But we can certainly look at triggers or red flags or green flags that will help us make decisions about how things are going to unfold. What are some of those flags we should look for?
Warren, I think there's a few elements that one must keep in mind. Number one, markets never move in a straight line. They go in leaps and bounds. And that's the one aspect. So never expect the market to go up in a nice straight line when it's starting to discount the change. That's the first element. Second element is background. Remember, Cyril Ramaphosa is only serving out Jacob Zuma's second term. He hasn't won an election. He hasn't got his own cabinet. He's purely serving out Jacob Zuma's second term. Now, what are the elements to look for? I think there's three big elements. It has to do with policy certainty, and it has to do with fighting crime or fighting wrong investment decisions, corruption. So the one element is about policy certainty, and I think there's the two big things that's at play: the mining charter and this whole debate about land reform. The mining charter, we have Minister of Mineral Affairs, Gwede Mantashe, in charge. I think the fact that the process has been extended means that they really want an inclusive solution. Now remember, that solution will never be a first prize for the politicians, nor will it be a first prize for the mining companies. It needs to be a solution that will generate renewed activity and renewed investments in the South African mining sector. That's the one element. The other element is the debate about land, the so-called Article 25 debate about property rights and where that's going. Now, we all know that right on the left-hand side, you have the view that the state must be the custodian of all property. Right at the other side of the spectrum is people that say the status quo must continue. None of this can work. And as long as this debate is about finding middle ground on the basis that we will still have investment in South Africa, that we will still grow the economy, and that it won't do anything about food security, I think we're on the right path. Those are the two elements. Then obviously is the element about corruption. And I think we underestimate the momentum we are seeing. The fact that there's on a continuous basis numbers being thrown around. There's, as SOEs make the results public, we see the numbers. At the 100-year anniversary of the birth of President Mandela, Patrice Motsepe made an interesting point. For every corrupt politician, there's a corrupt businessman. So I think we must realize these processes are going to take a bit of time, and it's not easy to unravel. But I was talking to one of the chairpersons of one of the big state-owned entities, and that person said to me that it's like chalk and cheese. Last year, everything was politically motivated, and you never knew who the parties was. This year, it is a question whereby it's the politicians are working together, it's about business, and you know what, if a deal flounders, if one of the sectors doesn't play ball, they've got a direct line to the presidency, and he acts on it. Now that is a complete different environment than we had under President Zuma. We had some of this under President Thabo Mbeki. Remember, in the last few years of his tenure, we were growing at 5%. So although this is not going to be a straight line, there's always going to be obstacles, there's always going to be ups and downs. We're certainly in a better place now than we were. The key for investors is, once the good news is there, the market would have discounted it. Once we see the good news on the newspaper headlines, the markets might be already up quite substantially. So be very careful to predict that change.
We've seen recently in the stock markets, the shares of the smaller companies in the JSE haven't really reacted very strongly to good news when it's been a positive surprise. We have seen in the last few years big shares on the JSE, especially those that are rand hedged, react to good news overseas, or when the rand's fallen, their share prices have gone up. But in the last few weeks, we've noticed a change. We've seen some of those smaller listed companies where they've appointed a new CEO and the share price jumps up 20% in a day, or the results were not as bad as everyone anticipated, and we see larger companies, especially South African businesses, going up 5 or 6% in a share price move in a day. So what it is telling me as a change in the market dynamics is perhaps markets and investors are starting to discount some of that good news at the early stages. And as you pointed out, you cannot time a 20% jump in a share. So it is important for investors to remain patient and to ride out these volatile times, because the good times do follow these bad times.